Africa has some of the world's richest energy resources. Oil and gas in Nigeria and Angola. Massive hydropower potential in the Congo Basin. Geothermal energy in Kenya and Ethiopia. Some of the world's best solar resources across North and Southern Africa. So here's the strange part: if Africa has so much energy, why does Africa still struggle to produce enough electricity? And the answer is more complicated and more expensive than simply saying Africa needs more power plants. Because having energy underground in a river or coming from the sun is not the same thing as having electricity at a factory. And that distinction is costing Africa billions. Around 600 million people in Africa still lack access to electricity. In sub-Saharan Africa alone, about 600 million people, roughly 47% of the population, were without access in 2024. But even people who are connected to a grid can face another problem: is the electricity actually reliable enough to run a business? Because a factory doesn't just need electricity. It needs electricity at the right voltage at the right time every day. A cement plant cannot simply stop production because the grid goes down. A data center cannot tell its servers to wait until tomorrow. A cold storage facility cannot switch off its refrigeration and hope the food survives. And when companies cannot trust the grid, they start buying their own solutions: diesel generators, batteries, solar systems, and backup infrastructure. That means the electricity problem becomes a cost of doing business problem. And this is where the story gets interesting. Africa's problem is not simply that it doesn't have energy. It is that the continent has struggled to build the enormous system required to turn energy resources into dependable electricity. Think about the journey. You can have a river with enormous hydropower potential. But first you need a dam. Then turbines. Then transmission lines. Then substations. Then distribution networks. Then a utility capable of selling the electricity and collecting enough revenue to maintain the system. Every one of those steps requires capital. And every one carries risk. This is why a country can have enormous energy potential and still have an electricity shortage. Take solar. Africa receives extraordinary amounts of sunlight, and the IEA estimates that the continent has around 60% of the world's best solar resources. But sunlight is not electricity. A solar panel produces electricity where it is installed. A factory may be hundreds of kilometers away. So now you need transmission. And if the transmission network cannot carry the power, the cheapest solar project in the world cannot solve the factory's problem. This is one of the least understood parts of Africa's energy story. Generation is only half the system. You can build more power plants and still have an electricity shortage if the grid cannot move the electricity. The IEA has warned that inefficient grids and insufficient interconnections are already creating bottlenecks for renewable energy development in Africa. Average line losses were around 15% in its 2024 analysis. And then comes an even bigger obstacle: money. Electricity infrastructure is extremely capital-intensive. A power plant can take years to develop. Transmission lines can cross hundreds of kilometers. And investors need confidence that they will actually get paid for the electricity they produce. That sounds obvious. But it is one of the biggest challenges in African power markets. Imagine you're an investor considering a $500 million power project. You don't just ask, can this plant generate electricity? You ask, who will buy the electricity? Will the utility pay? Will the government honor the agreement? What happens if the local currency loses value? Can I get my money out? What happens if interest rates rise? What happens if the project is delayed? And what happens if the electricity tariff is politically too expensive for consumers? Suddenly, the price of the solar panels or turbines is no longer the only issue. The financial structure becomes part of the electricity price. This is why Africa can have some of the world's cheapest renewable energy resources and still struggle to build projects at the scale required. The IEA estimates that Africa attracted only about 2% of global clean energy investment, despite accounting for around 20% of the world's population. And the gap between what Africa needs and what it is currently investing is enormous. The IEA estimates that achieving universal electricity access across sub-Saharan Africa by 2035 would require almost $150 billion of investment, roughly 6 times current annual spending levels. So this isn't simply an engineering problem. It is a financing problem, a policy problem, a grid problem, a utility problem, and ultimately an industrialization problem. Because electricity changes what an economy can produce. A farmer with reliable power can move from selling raw agricultural products to processing them. A manufacturer can run machinery for longer. A mine can process minerals closer to the resource instead of exporting raw ore. A cold storage company can preserve food. A data center can operate. An electric vehicle manufacturer can charge vehicles and run production lines. This is why electricity is not just another infrastructure sector. Electricity determines what kinds of businesses can exist. And this creates a powerful economic cycle. Reliable electricity attracts industry. Industry creates demand for electricity. That demand makes large infrastructure investments more commercially viable. More investment expands the grid. A stronger grid attracts even more industry. But the opposite can also happen. Weak electricity systems discourage industry. Low industrial demand makes infrastructure harder to finance. Utilities remain financially weak. Investment stays low. And the electricity system struggles to improve. That's the trap Africa is trying to break. But there is another important shift happening. For decades, much of Africa's energy investment was concentrated in oil and gas, often for export. The IEA says roughly half of Africa's energy investment over the past decade went into oil and gas, primarily for export markets. Meanwhile, clean energy investment has been accelerating, with private clean energy investment rising from about $17 billion in 2019 to almost $40 billion in 2024. That creates an enormous opportunity. Africa doesn't necessarily need to choose between having energy resources and building a cleaner electricity system. The bigger opportunity is to use those resources to build productive economies. Solar farms, geothermal plants, hydropower, gas where it makes economic and system sense, battery storage, transmission networks, regional power pools, industrial parks, and eventually, industries that consume enormous amounts of electricity. Because the real prize isn't simply generating more megawatts. The real prize is what those megawatts allow Africa to produce. And this is where the conversation about electricity needs to change. Instead of asking, how many megawatts did Africa add? We should also ask, how much manufacturing did those megawatts enable? How many mines could process locally? How many factories became competitive? How much investment followed? How many jobs were created? How much economic value stayed on the continent? Because a megawatt sitting behind a transmission bottleneck has limited economic value. A megawatt powering a factory is different. It can become steel, cement, chemicals, food products, digital services, mineral processing, and exports. That is the real economic value of electricity. Africa doesn't have an energy resource problem in the way many people imagine. It has a conversion problem. Turning resources into generation. Generation into transmission. Transmission into reliable electricity. Reliable electricity into competitive industry. And industry into economic growth. The continent has the resources. The question is whether it can build the infrastructure, financing systems, and institutions capable of turning those resources into productive power. Because Africa's future may not be decided by how much energy it has underground or how much sunlight falls on its land. It may be decided by something much simpler: can Africa get reliable electricity to the businesses that need it, at a price they can actually afford? If it can, electricity stops being a constraint on industrialization. It becomes one of Africa's greatest competitive advantages. If you found this analysis valuable, subscribe to the channel. We break down the energy, money, and infrastructure shaping Africa's industrial and economic future, and explain what the numbers really mean for businesses, investors, and the continent. Like and turn on notifications so you don't miss the next analysis.